Hello, and welcome to a new episode with your host, Vinney Chopra. I'm so excited to have you here as we dive deep into the world of real estate investing, syndications, abundance mindset, and building generational wealth. We are excited to be in the top 1.5% of the real estate podcasts. Got number 11 actually out of top 50 real estate syndication podcasts. Thanks to you. Each episode, we bring powerful insights, expert guests, and actionable strategies to help you take your investing game to the next level. Whether you are a seasoned investor or just getting started, if you love what you hear, please take a moment to subscribe, leave a 5-star review, and follow me on social media so that we can never miss an episode. Your support helps us continue sharing valuable content with more people like you. Now let's jump into today's episode. Thank you.
Welcome back, Alchemist. This is Abundance Thursdays with myself, Gualter Amarelo, and the great Vinney Chopra, who's calling in from Hawaii on vacation. Thank you, Vinney.
Hey, brother, how are you? It's really pretty. Very pretty out here. Oh my gosh. Just the beautiful scenery, the beautiful waterfall, the fresh air, everything. It's always great to be alive and well.
So, Vinney, you've been here now 3 days. The hotel from the tour you've been giving me walking around seems like a very nice hotel. Is this the sort of hotel that you would buy? Is this the sort of place that you would actually like to own?
This baby is very expensive. It's a Fairmont Orchid Hotel in the Big Island. No, I don't think so. These are pretty high price hotels. The top tier, I like the middle size because that's where the occupancies you could get to 80%, 87%. This one might be doing 60 maybe or something like that. So they are harder to manage and they're big outlay of cash and everything. For me or my people who are smaller, we should not own these big ones.
It's so funny that you say smaller people. When you buy deals that are $26 million, $40 million, it's funny to see you talk about a hotel that is expensive. I love that. How many doors is that hotel, do you think? Is that
This
300,
is got
400, 500 doors?
160, I think. No, I think so. Maybe I should have asked them. I think it's 160. There are 2 wings, 4 stories on both sides, and very nicely situated. I think they've done a good job in designing the whole thing, and the wind is subsided. I love it. Yesterday it was very windy here.
So Hawaii is amazing. We're going to dive into Wealth Principle 4 because that Wealth Principle 3, I know you're hanging out with your family, so we'll try to do this one as quickly as possible. Wealth Principle 3 is understand the 4 types of money. And very quickly, for anybody who doesn't know what the 4 types of money are, those are income, profit, flow, and equity. And we're going to go through each one of them today. Vinney has done, you name a business, he's done it. You name a business, he's touched it, he's been invested in, he's used it, leveraged it. But he's focused now on real estate. It has been for the last 30 years or 40 years. Now, real estate has a lot of different sectors in it. There's single family flips, which Vinney did do single families. He did rental properties. He's done storage facilities. He's done multifamily. He's done hotels, and he's done senior assisted living. And now he's at a point where hotels are really what he likes the most because it's got all 4 of these: income, profit, flow, and equity. So let's dive into the very beginning of this. By the way, for anybody who doesn't know who Vinney Chopra is, you can go to vinneychopra.com and learn more about Vinney Chopra. If you don't know what Alchemist Nation's mission is, you can go to alchemiststation.com and learn more about what we do here. But Abundance Thursdays happens every Thursday at 9 a.m. Pacific Standard Time or 12 p.m. Eastern Standard Time, as long as both me and Vinney have time to do the call.
Yeah.
Income is where most people stop, Vinney. So most people don't go past income. So let's talk about that one because it's the quickest we should be able to get through. Why do most people stop at income? Income comes in, they work a job, and then they never do any kind of investment. They never own businesses. Why is income so important, do you think, to broke people? And where does it stand in your world? Like, where do you put income?
I would say income is it's the security. It's the lifeline. It's to pay the bills, right? You've got to have good qualification and good job, WT job, I call it. It could be also entrepreneurship and everything. The key thing is it pays the bills. You got security and things like that. But people get so consumed with all the work we put in, 8 hours, 9 hours, whatever it is. We are so tired, we are stressed out. Then we don't think about other forms of income, other forms of money, which we're going to talk about today.
So you're right. It pays the bills, but it should
Yeah.
never be the end goal. That's one of the notes you
No.
sent me this morning. So
Yeah.
you said treat every dollar like an employee, make sure it works harder than you do. One of the hacks you put in here is set a weekly income check-in on Sundays, review every income stream for growth opportunities. Sunday's the day I use. I know you use Fridays. So very cool that you check things in. Number 2 stream of income is profit, where wealth actually begins. What is the difference between income and profit?
See, the thing is, when you earn the money, you're able to spend money, expenses go out. What's left behind are the savings. Now, what are you doing with those savings dollars? Now, are they just sitting in the bank getting 1, 2, 3% or whatever? Inflation is 3%, so you're losing ground. It's what you're doing with that money, that dollar, just like we were talking about. Dollar should be our people or something. Each dollar should bring more growth of the dollars or more income. So the income comes by investments into investing into accounts, investing into properties, into we are into real estate. You and I are knee deep into real estate, but there are other ways to also make your money grow, right? In stocks and cryptos and all the different things, right? One can do.
And I had one of the
Yeah,
definitions I've seen from profit is business.
yeah,
Profit comes from a business. It's something that is operating without you that generates a profit. Profit
yes.
is, it could also be dividends, right? So something that exists that is giving you money that you didn't have to put anything in or you didn't have to do much for. Profit is business revenue. Now, one of the notes you did send me is revenue is vanity, profit is freedom. You
Yes.
suggested cutting waste, simplifying, outsourcing, delegating the $10 tasks so you can focus on the $10,000 tasks. Profit is not accidental, it's intentional and engineered. So that's something
Yes.
important for business owners to understand that profit should exist in every business, but it does not. Revenue is not the same as profit. And I hear that a lot with real estate investors, especially. They'll tell me,
Mm.
oh, I cash flow this much. But
Yeah.
the truth is that's their gross rents and they're not thinking
Mhm.
about the mortgage. Or they'll tell me gross rent minus mortgage. They'll say that's their cash flow and they're not talking about the expenses. They forget that there are expenses to the building. So profit would be true cash flow. For anybody who's listening, we'll call it profit. True cash flow comes afterwards. The next one is flow. And so for a lot of people, they know this as there's a certain amount of money that has to be in your bank account because that's the bills that are coming out every day. Entrepreneurs,
Yeah.
real estate investors, we know the mortgage comes out, the insurance comes out. These expenses are coming no matter what. And so that's a factor. How is flow control? Like, why does flow become relevant? And how does it change as you scale up your company and scale up your business?
See, I think the big thing when we say flow, velocity, we call it velocity of money. You've got to make sure that whatever you're doing, this your money should not sit some in the emergency funds and so forth like that. You want to have that cash position on 6 months or 8 months or like that. But the rest of the savings and the money in your business should be really making more money. And that's the velocity of money, we call it, where you're able to invest in different vehicles so that they are bringing more growth of the money. If your just money is under the pillow, nothing is going to happen to it. It will decrease in its value. But the key thing is to apply to be able to invest in different vehicles so that the velocity of money will bring the growth of money or the investments that you are making into your business, outside with third party, in different other vehicles.
I'm really glad you said velocity of money because I think a lot of investors don't do this. I made a mistake when I was investing earlier this year. I had insurance policies that were very expensive. When I brought the
Yeah.
consulting firm in, they took one of my policies from 70,000, they made it 40,000. And they said, "Look, that 30,000, it wasn't good flow. The money was coming through, you were
Um,
spending it, yes, but it didn't turn units. it wasn't marketing dollars. It wasn't a nicer appearance of the building, just was flow that wasn't relevant. If you put the right dollar, you're spending money, but are you spending the right money on the right things? Or could that be spent somewhere else that actually gets you a better investment, a better yield? That's an example as an operator. The other example that Dave Ramsey loves to use is the Starbucks. So you're spending, my wife spends over $500 a month on Starbucks. We just found this out as she's digging, and I didn't realize I'm spending almost $6,000 a year on Starbucks, but it's flow, right? So you can look at that and say $6,000 put into your Roth IRA. What would that make if that was contributed in that direction? And I'm not saying that Dorina has to stop Starbucks, because she financially is very okay to spend $500 a month at Starbucks. But for somebody who doesn't know and isn't in that situation, think of the example of people who own boats, right? I know people who own boats that cost them $10,000 a month just to operate that boat. And that $10,000 a month added up every 6 months or every 5 months could be $50,000 investments. So over a year, it's $100,000 they could invest in something else, or passive income streams. So there's flow, bills we spend that maybe aren't providing a return. This fourth one's my favorite. Fourth one is equity. And Vinney, all of the deals I hear you talk about are big equity deals. You don't touch stuff without equity in it. A hotel you bought for 14 that sells for 24 million. A hotel you bought for 40 million that sells for 66 million. These are equity numbers. Why is equity so important to real estate investing? Why is it so important to the Vinney Chopra philosophy for investors?
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? You know, I wrote this book a few years back, Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor, go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it, but I would highly recommend for you to get these, or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
Oh my gosh, it is the life and blood of any investment. You don't want to buy, especially in real estate or even in stocks. Equity is built in stocks. When you buy it lower price and the company does better and then the price goes up, of course you make money in dividends, and then you make money in the equity. In real estate, it's the best thing going in this world, in this amazing, because you get leverage. Where the bank comes and gives you 70% of the money you need to buy the building, 30% you raise, we call it equity. And now, when the value goes up in 3, 4, 5 years, the equity grows. In other words, the value, the NOI, net operating income, you have to get actively involved and your team involved so that they're able to increase the income, decrease the expenses. It's very simple equation. Now the NOI, net operating income, grows, and if the cap rate compresses, meaning that the location we call it, if the property gains in value because of compression of the cap rate, that's like doubling, tripling, quadrupling, because the cap rate is such a factor which can increase your value of the property very high. You increase the NOI and you compress the cap rate, that's when you become amazing equation for the investors, for your own earnings and everything. Now the equity goes from whatever it was, let's say 5 million that you invested into the property, it grows to 15 million or 20 million. Everybody is a winner now. The investors are, you are. So it's very important that we increase the equity. The business should grow, the property should grow in value. If it's not in a good location, it can stay the same or go down. The other factor I love to talk about is the market cycle. See, people say, Vinny, why don't you hold your properties for 20 years, 30 years? It's okay. But every 6, 7 years, the property, it's a market cycle. The properties go up, then property go down, then up, then down. It may increase in value, but it's going to go down also when things happen. Anyway, it's a long answer, but equity growth is the key to success in building legacy wealth.
It's a long answer, but it's the right answer. So for anybody listening right now, what Vinny just described is the market cycle. So real estate does not just go up into the right.
Yeah.
There are 4 stages. I learned this from one of Vinney Chopra's PowerPoints in one of the slides that he actually has to all of our mastermind members. He gives it out. And it says that there's a buy 1, buy 2, S1, sell 2 factor
Yes.
to the cycle. I know we took that from Dave Lindahl, who originally wrote the book on emerging markets.
Yes.
And I read the book thanks to you suggesting it. And for everybody listening at home, the buy 1 market is where it totally makes sense to buy, right? Nobody's buying. It seems crazy to buy, but logically, investors, this is like blood in the streets. Property prices are so low. People are leaving the market. Like it's just, it is not obvious, but you can see the prices are so low and the rents are just holding their line. They're not going down any further. They've just stopped, but the property values keep compressing. So then buy 2 is when it starts to stabilize, but they're still low. S1, this is what Vinny's talking about, is you want to buy in the buy 1, the buy 2, but that S1, it's sell 1. This is where properties they sell fast off the market. They're moving quickly. Home values have gone up. Rents are going up. What Vinny's also warning about is the sell 2 market. So sell 2, things start stagnating. They stay on the market for much longer. This is where we are right now across the country. We're in this, most of the coasts are in a sell 2 market or sell 2 cycle. But there are certain markets like Cleveland are coming up now. So that's a market that's more it wasn't a buy 1 maybe 4 years ago. Maybe now it's in a buy 2. There's different markets all across. So anyway, equity, the reason Vinny brought that up was equity is designed to, sometimes you sell, right? You may say hold it forever, but it would actually be detrimental to Vinny's portfolio if he held just the stuff he bought originally and never sold. Just relied on refinances when the cash is high. He would slow down his whole portfolio. He wouldn't be able to scale. There would be no 1031s. He wouldn't be able to leverage all that. Vinny, why do people misunderstand equity so much? Why do you think real estate investors as a whole hold forever and forget to sell? Where does that disrespect for equity come from? The lazy equity, the dead equity.
Again, those people who just are building their legacy wealth, they're not very active in looking at their changing of the guard, I call it, giving some kind of profit to the new buyer. That's the key. That's the key. You got to sell it. Usually 3 to 5 cycles. I've been in syndication and fund manager raising money. So investors, we tell them also, we're going to be selling this property in 5 to 6 years. And they like that. That way they are able to take it from a position of good location, growth in the community and the growth in value of the property, take the money out, sell, everybody gets their equity growth and everything. We could do 1031, we could do into cash flow, and then take that money out of that investment into another emerging market, another emerging asset, which will grow again. Especially in this market, it's so good right now that you could buy A class or A minus class buildings so cheaply right now. Right now, 2025, end of 2025, 26, it's going to be amazing. Lots of distressed assets. You're a prime example. You're buying them hand over fist.
They're stabilized. We're taking over agency debt now. They're stabilized. They're B's and A's, and we're now in negotiations on B's and A's, which we were not a year ago. A year ago, it was all C's and B's, and the A's are starting to come to the market now, especially in Jackson. We're seeing a lot of that. Cleveland as well. Absolutely amazing. So yeah, there's the B's are in Cleveland and Jackson. They haven't built a lot of A's, right? The A's are new construction, but we're starting to see it in Orlando. We're starting to see it in Tampa. We're seeing the A-class stuff come to the market, and Atlanta, Georgia. We're seeing it in Austin, Texas. They just spent too much. They were in the wrong debt, and they need to get out. And it's a lot of bridge financing that people are just trying to exit from. Now's the opportunity. So, Vinney, what piece of advice do you have? Somebody, I know you're on vacation. For everybody at home, this is Abundance Thursdays. Vinney Chopra. You can find out more about him by going to vinneychopra.com. He does trainings. He does them 2 times a month now on hospitality and on senior assisted livings and RALs. That is vinneychopra.com/events. Or you can go to Eventbrite and just type in the name Vinney Chopra, and you'll see his 2 events that he does every single month. There's a mastermind Vinney does on Wednesdays. Shoot me a message if you want access to it. Get 4 free showing up to that mastermind. I jump in every so often because Vinney is a wealth of knowledge and a lot of fun. And we'll get you set up. So, Vinney, what piece of advice would you give to somebody right now? Which of the 4 do you think people ignore the most? And which do you think would really be most beneficial to start paying attention to 2026, 2027, as we're getting towards the end of this year, really planning out this next year?
See, I'm so glad you're asking me that. Again, it will come to the velocity of money. I always have felt it's okay to earn money, to save money, but the saving of the money, you need to put that money in the right place. Your retirement funds, your everything, you need to be looking at how to grow your money 10, 12, 15, 20% per year. If you want to double your money in 5 years, rule of 72, you have to divide 72 by the whatever interest rate you're getting or the dividend or the growth you're getting of your money. So go ahead, and if you're getting only 6%, 72 divided by 6, it will take you 12 years to double your money. But if you are other way around, if you get 12% of your money per year, it will take you 6 years to double your money. So find vehicles, learn, educate, and find different operators like me and others who are buying great deals right now. Invest with them so that they can take your money, grow your money. So velocity of money is number 1 in my books.
I love it. Ladies and gentlemen, cheers to success. When you have a choice, always work with the best. Vinney, enjoy Hawaii, my friend.
Thank you, brother. Thank you so much.
Cheers,
Thank
guys.
you, Gualter. Bye-bye, bro.
Bye-bye.
Yeah.
Dear friends, this is Vinney Smile Chopra. I am so glad you're listening to the episode. Thanks so much. Really appreciate that. Please share it with others who can really benefit also. Can I ask you a favor? Just a small favor. Less than a minute, if you could give 5-star reviews on iTunes or Stitcher, that'll go a long way. We are one of the top podcasts in real estate now in the nation, but it will really help a lot if you gave 5-star reviews, and we'll bring a lot more great content for you. Thank you so much. Appreciate that, and see you in the next episode. God bless you. Bye-bye. Wow, what an incredible conversation today. I hope you got tons of value from this episode. If you did, don't forget to subscribe, leave a 5-star review, and follow me on social media to stay updated on all the things real estate, investing, abundance mindset, and wealth creation. If you're an accredited investor looking for exclusive investment opportunities, be sure to join our elite Monil Investors Club at vinneychopra.com/invest, where we share details of our future projects. Quick disclaimer, we are not selling any securities, and this podcast is strictly for educational and information purposes only. The opinions shared by our guests are their own and should not be considered financial or investment advice. Always do your own due diligence and consult with a financial professional before making any investment decisions. Thank you again for tuning in. Until next time, keep smiling, keep investing, and keep making a massive impact. God bless.
Hey there! The upcoming episode is scheduled for Thursday. We appreciate your viewership of the Abundance Mindset Show. Tune in every Thursday at 9 a.m. Pacific Standard Time or 12 p.m. Eastern on various social media platforms hosted by Vinney Chopra and Gualter Amarelo. Don't forget to subscribe, share your comments, and leave a 5-star review. Thank you for your support.